Jai Hind friends, warm welcome to our YouTube channel. If your income is crossing a threshold limit, then ITR filing become mandatory. In some of the condition, your ITR filing become mandatory if your income is not crossing the threshold limit. Who are required to file their ITR mandatorily? We have already uploaded a detailed video. But in this video, we are going to discuss as your 2026 year is about to start, who are not required to file their ITR means income tax return in the year 2026. So without further delay, let's jump into the video and let us know who are not required to file their ITR income tax return in 2026. So friends, from 1st January 2026, your calendar year 2026 has been started. ITR means income tax return filing will not be applicable in which of the cases. So first of all, ITR is income tax return. It is a self-declaration form. You need to declare, you need to show your income of the entire year. If any tax payable, you need to pay. Many people earn and do not file ITR, and many people file ITR but they do not earn. So you need to make sure that you have to file ITR or not. As we discussed already, from 1st Jan 2026, your calendar year has been started, but Income Tax Department work financial year wise 1st April 2025 to 31st March 2026. Your year ended will be 31st March 26 and it will be financial year 25-26 and assessment year will be 26-27. So all the limits need to check financial year wise, assessment year wise, not from the calendar year wise. So after year ending, you will get 4 months, April, May, June, July to file your ITR. If your turnover is more than 1 crore, if your service receipt is more than 50 lakh rupees, so you need to conduct tax audit from a chartered accountant before 30th September and you will get 1 more additional month for your tax audit case of ITR. If you forget to file your ITR, you can file your belated ITR or you can change if you have already filed your ITR up to 31st December. So 4 years from the end of the financial year, you can file ITR, you updated ITR, but there are several conditions. A person can earn 5 type of income: salary or pension income, house property income means if you have any shop, commercial, residential building for rental income, if you have any capital gain like share, property, mutual fund, if you have PGBP, if you are selling something, if you are providing any service, and if do not fall in all of the 4, then income from other source like saving, FD, interest, dividend or any part-time income. So ITR filing mandatory or not depend upon the income head and depend upon the nature of income. So before filing ITR, if you want to file your ITR, you have to select ITR form from 1, 2, 3, 4. ITR form 5, 6, 7 not be applicable in the individual case. So if you are filing your ITR, it will be very helpful to take any loan, to apply any credit card, to take high value insurance, to visit foreign abroad, to take any kind of visa, if you want to claim TDS, if high value transaction showing in your AIS, TIS and 26AS. After filing ITR, the transactions may get justified and you can save yourself from income tax notice. Now before filing ITR, you need to choose old tax regime or new tax regime. So if you want to take old tax regime, there are many deductions, exemptions available. In new tax regime, no deductions and exemptions, but there are higher tax saving like no tax up to 10 lakh rupees. So it's depend upon person to person, but in this financial year, approximately 99% people will select new tax regime. Now ITR filing become mandatory or not, it will depend upon type of income. There are 3 type of income: normal rate income like salary, pension, rent, business or any interest income; special rate income like long-term capital gain or short-term capital gain in share market or mutual fund; super special income like if you do have virtual digital assets, cryptocurrency income, gaming income or any online income. So if you are having any normal income in old tax regime, you need not to pay tax up to 5 lakh rupees. In new tax regime, you need not to pay tax up to 12 lakh rupees. So every person A uneducated person will let you know that which regime is better. New tax regime is better because there is no tax up to 12 lakh rupees. So friends, whenever you have provided your PAN number to do any financial transactions like opening saving bank account, FD, credit card, share market, cryptocurrency, and no data showing in your AIS, TIS and 26AS, so it is advisable you must check your data after year end. Your year end will 31st March 2026. It may take April or May 2 months. So in June or July you must check your ASTS 26AS. If no data showing over there, you need not to file your ITR. Now income criteria, after adding all the 5 head income, gross total income, if does not cross basic exemption limit, which is 2,50,000 rupees in the old regime for age less than 60, age 60 to 79 3 lakh rupees, age more than 85 lakh rupees. So if you want to choose new tax regime, there is no age criteria. If your income does not cross 4 lakh rupees, then ITR filing not mandatory, even it is normal income or in special income. But if you want to take deductions or exemptions, suppose in old tax regime you have income 3,50,000 rupees and ATC or any deduction is 1,50,000 rupees, so your taxable income become 2 lakh rupees. There is no tax, but ITR filing mandatory because your income grows 2,50,000 rupees. If you do not have any super special income like lottery, crypto, gaming, winning, so you need not to file your ITR. Section 194P in income tax, there are many category of taxpayer on the behalf of their age. A normal person is less than 60, 60 to 79 is senior citizen, more than 80 are super senior citizen, but one more category more than 75 year are called specified senior citizen. If you are a specified senior citizen, you are having only one bank account and you are getting only pension and interest income, then you need not to file your ITR. You need to just give a declaration to bank that I am a specified senior citizen, so ITR filing will not mandatory. TDS will be deducted by banker under section 194P and it will get deposited. Friends, if you have not filed ITR up to due date, means 31st July, and after that if you file your ITR, so there is no late fees up to 4 lakh rupees, more than 4 lakh rupees 1,000 rupees. Late fees more than 5 lakh rupees income, no tax payable up to 12 lakh rupees, but after 5 lakh rupees you have to pay 5,000 rupees late fees. Interest under section 234A B, C, penalty, loss will not be carried forward. You might receive any notice and imprisonment can be happen. So always check your AIS, TIS and 26AS. If any online income or transaction showing online, so it is always worthwhile, better, advisable or recommended to file your ITR. Friends, you must have your personal chartered accountant. If it is not the case, I am always available for your help. You can call, message or WhatsApp us. So always check AIS, TIS and 26AS. Check your bank transactions limit, cash deposit or withdrawal limit, FD limit, credit card limit, any property sale limit. Friend, if you find this video useful, please hit the like button. Please don't forget to subscribe us. Share this video with all the people who don't know who have to file their ITR or not. If you have any doubt, query, question, feel free to ask in comment box. Friends, one question in the end. If a person having 3,90,000 rupees as short-term capital gain income, no other income, and he choosing new tax regime, so will ITR filing become mandatory or not, and why? Please let us know in the comment box. Thank you so much for watching this video. Jai Hind, Jai Bharat.